So one of the things I get asked a lot is how do our rates and costs compare with other banks and financial institutions, and how to best compare it apples to apples. The best way to do that, if you don't want to take the plunge somewhere, is to ask for a fee sheet. And a bank or institution should be able to give you a sheet that lists out everything that you might have to pay for at the closing table before you commit to a loan. The other one is what's known as an initial loan estimate, but that is given to people who have already submitted an application and had their credit run, and usually have an existing purchase agreement already set into the bank. That one usually has any bank fees, closing costs, any government delivery fees, title fees, appraisal fees, and you can get those. You can send your application into multiple lending institutions. Just be prepared to maybe have your credit pulled. If you have those initial loan estimate sheets from two institutions, that's probably the most accurate. Getting your loan sold off is not really a big deal. Loans in general have two parts. Think of an iceberg, the part you see above water and the part you see below. The part you see below is the financial, the money part. And that, for the most part, is all sold off on all loans all the time. The part you see above water is the servicing portion. And what gets affected is that servicing portion. Who is servicing the loan? Union Savings makes a point to try and service as many of the loans they generate as they can. Even if we've sold it off completely, both the finance and the servicing portion, I try and steer them in the right direction to get answers. If we still service the loan and I'm their loan officer, I'm helping them get their questions answered and getting what needs to be done to the right people and communications back and forth so it's resolved quickly. For low fees, there are probably extra costs added in to the closing on top of whatever they expected to be paying at the closing table. For instance, I had someone text me about an offer they received through the mail. The rate was 3% lower than any other market rate at the time. And what I told them was, I can't speak for this other institution, but if it was us here at Union Savings, the cost to get the rate down from where the market is right now with all of us in general down to what they're advertising, it would cost most of the money that they're giving you as a cash out refinance. So then you would have to turn around and make a payment for that money that they use to pay down the rate, and you would see no benefit, but you'd be paying interest on it. That's kind of the thing, some of the things that might happen when you get these offers for an extra low rate. I can't speak for all loan officers, but I want to say that loan officers should try and stay in touch with their customers. I try and reach out to them occasionally, usually on the anniversary of when they've bought the house. I kind of keep track of that and at the very least send a text. The other thing is, I always tell them that I'm okay answering my phone with a text or a voicemail, and they have my number and my email throughout the process. And so that way, if a week or a month or even a year goes by and they have a question, or they get a letter, or they get some kind of piece of junk mail and they don't know what it means, I always tell them, please feel free to give me a call or shoot me an email or text, and I will answer your question and explain what you got and why you got it and what you need to do with it.